We have PNB Housing Finance as well, which listed on the bourses today. The counter has cooled off after making a stellar debut, but this counter is still holding on to gains. Nivrita Ganguly, my colleague, spoke with Sanjaya Gupta, the MD at PNB Housing Finance, to get his perspective on what lies ahead for the home lender. Let's hear him out.
Our leverage is going to come down now significantly. We are going to actually more than double our net owned funds by this infusion. So it will come to about, our leverage will be hardly 6 or 7 times from 15 times. And but we are going to improve on it, and our average lever or gearing ratio, as they call it, will be around 10 times in the midterm.
All right, so is that in 2 or 3 years? Where would you see it?
Yeah. So in 2 or 3 years, we are going to bounce back at about 10 times, 11 times. And it is also, that significantly we have demonstrated that we use our capital most efficiently by leveraging it so high. So a lot of institutions, they don't lever the balance sheet because they're not able to raise debt, the proper debt at proper cost, in the market. But we have in the past demonstrated that we could do it pretty well.
So now there's some intense competition in the housing finance space. So where do you see this putting pressure on your margins? Can you give us any outlook? Because currently it's been around 2.9. That's less than your peers. Where do you see your margins?
Well, so our margins, we work on a gross margin. So our portfolio mix, as I keep saying, will remain same. Hardly 1 or 2 percentage point change you will see when it comes to product. Our gross margins are maintained at 3.4, 3.5. You will see the same. In our H1 results, which are going to be out on 15th of November, and I'm sure that we are going to maintain a very healthy margin, even though we were so highly levered. So as I keep saying, that when it comes to ROTA, it comes to margin, leveraging also plays a very important role. And we were highly levered, so that used to also compress our spreads quite a bit, about 30, 32 bips. And that's going to improve significantly now.
So you said you're maintaining a portfolio mix, but so your pure housing retail loans come in at around 61%, if I'm...
No. Our retail portfolio is about 85%. 61% is housing loan. Then about 18-19% is loan against property to individuals. So our wholesale book is only 15%. And out of that 15%, about 65-67% is construction finance, and rest are corporate term loans to large institutions.
So the housing loans have been growing at about 55%. We've seen very robust growth. Do you expect that you can sustain this going forward, or do you expect it to moderate?
So obviously the growth rate will moderate, but the quantum jump will happen because our distribution is going to become far stronger than what it is today.
Okay.
Yeah.
So my last question to you, your ticket size is significantly higher than your peers, I think 32 lakhs. So do you expect this to continue?
So what will happen is that when we go to tier 2 to tier 3 cities, our ticket size will come down, and hence the ticket size, the average ticket size on the portfolio will also come down.
Any more details you can tell us about your expansion geographically? Where do you want to...
I can talk about geographical expansion because that was part of our RHP and our DRHP also. We are going to open 18 more branches in this financial year. About 8 branches have already come into operations in H1, and we will add up about a dozen more in this year.
So that was the management of PNB Housing Finance, clearly saying that, in terms of the wholesale housing book is concerned, that comprises of almost 15% of the total book. Additionally, the current portfolio will remain the same going ahead as well in terms of where the breakup of segments is concerned. And additionally, in terms of the capital that has been raised via the IPO is expected to be adequate at least for the next 30 to 35 months. And if you see the listing as well, gains of almost 15% coming in there. Let's shift focus to another